Welcome to our Sunday update where you get updated weekly expected moves for the SPY and the Qs, and we update everything on Patreon. It is a great day, minus the fact that it's pretty much a blizzard outside. It is awful out there right now, so I am perfectly fine, happy inside, nice and warm, looking at some charts, and hopefully pointing out some helpful things, because these weekly expected moves can really help us out going forward as we do some technical analysis for the SPY Qs, Apple, Tesla, Amazon, Nvidia, Meta, Microsoft, AMC, and GME, and then we'll pop over into volatility for a little bit. But some key things we're going to be paying attention to are we getting above this level this week? Because I think we have a high potential to see some kind of squeeze. Let's get into it. First things first, everyone talking about the head and shoulders. Once again, we weren't fooled by that. We were reading into the smaller time frames very well. We were reading into the structure of the daily chart. If you want to look into the bigger time frames and understand a little bit, I gave an overview of why we were overall not scared of this kind of behavior. You can look at our previous video that we just put out yesterday. It will really help you out in figuring out why we weren't leaning towards some kind of absolute collapse here, and we think people were wrong to pay attention to this head and shoulders. Now, when we get into the shorter time frames, we got to get you those weekly expected moves, right? We have confirmed the 2-hour divergence here, suggesting that that daily chart is about to go up and maybe make a move towards new all-time highs. And we do have 601.82 to the upside and 582.08 to the downside. This is your 68% zone with a 32% chance to see something crazy. And now we have super obvious levels. Like, you really like all of this price action now, because we have very obvious levels. If you start to break down below here, that shows extreme weakness. If you start to break above here, it shows extreme strength, which means above this level, we might be squeezing at that point. So we'll pay attention to it. It also might mean that since this 2 hours pointing in that direction, maybe we end up in this area by sometime this week. And if we do that pretty early on in the week, we would be looking for consolidation to break through that resistance at this point. So this is actually looking very, very good. Now, you do have updated daily expected moves as well for Monday, 595.49 to the upside, and you have 588.41 to the downside. So what we're paying attention to with the SPY on the 30-minute here is whenever this thing wants to reload, the 30-minute likes to reload, right? Markets do not just shoot up always, in a squeeze. They will still experience those minor pullbacks. So we have to pay attention to what we like to do to get out of a zone. To get out of a zone, we see a strong move. Sometimes we dip back in it to actually head higher. So that's where we can pay attention to the downside expected move. Even if this 30-minute does roll, you want to treat it with caution, but it is far enough into positive territory where you could just pull back into the zone to get a moment where it just reloads, kind of like this one over here. So that's what I'd be paying attention to for downside early on in the week, and then see if you can get that to react off that and end up going in the right direction again. So something you can pay attention to the upside is notice that the 30-minute is not overbought right now. So if we wanted to extend this overall move, this is where we can run into some issues. We can see that this has been a key level a few times in the past here, just recently, right? So we might want to reload, retest the 5 from that area, or maybe even dip all the way down into our zone before making the next upside move. So these are two things that I would really be paying attention to. Obviously, the main thing that you'd pay attention to if we are going to start to squeeze right away is, do we get past this level up here? We set a level of 600, but before it was all said, we weren't putting a hard number on it, and we just said, hey, this high right here, you take that out, that's where hey, we are most likely headed to all-time highs in January. Important to note when we pop over to the Qs that the daily has not crossed up yet, but we are starting to see some inclination of some serious bottoms, right? We've explained this on Saturday, so just the fact that that's confirmed, if that goes positive, hey, where are we most likely to get to? Oh, well, 529.78. Thank goodness for weekly expected moves. They've really helped us out over the last, I would say even 6 months. We've really been tagging them. We had that one period where we didn't tag them for 3 weeks. Then we go, okay, now that's very unusual. And then we tag it the next week. So 529.78 to the upside, 507.38. You tag these at least 3 times within the month normally. So that's something we can pay attention to. And then your daily expected moves, we do have 522.80 to the upside and 514.36 to the downside. What's the key level to get past in order to see some kind of massive squeeze to go to all-time highs? Well, it's right here. So maybe we'll end up up there? What if we end up there by the end of the week, right? What if we end up there by the end of the week? We could see a pullback a little bit and then see that next move higher. But mainly we just want to see, does the 2 hour remain curled up? Can it go positive? Can it keep going? That would be a good sign. For the 30-minute, we don't see any weakness for the 2 hour at all. So most likely this is getting into the first bits of its positive trend. And we have those daily expected moves for you right there. So if we're going to dip down, you can tell, and this is the best part about today's video, is a lot of stocks are giving you seriously obvious levels. Look at the weekly expected move. Below that, bad. Above this, squeeze. Below that, bad. So if the 30-minute is able to roll down here, you would expect that some kind of reaction to bounce out of that zone is coming. If you look in the past, we got really close to touching the top of that zone, dip back down into liquidity, but we dip back down to go higher. So if we need that to head higher here, I expect that would be a good place to bounce off from. You would have great structure as far as a head and shoulders to the upside. So I really enjoy that kind of thing going forward. But we can pay attention to also, if that wants to keep going, then it might reload in this area very briefly, right? If this is going to be a little bit squeezy, we might just see brief little pullbacks, and maybe we're going to use this chunk in here to give us some kind of massive head and shoulders with just some very small shoulders. So we'll pay attention to it. But for the most part, we can just see, hey, this is starting to be the bullish move. If we continue to be bullish throughout this move, then there's nothing to be scared of. Right now, it does look like the most likely option for the SPY and the Qs are to go to new all-time highs, and that's why we gave you monthly expected moves throughout this weekend on Saturday. I am wondering when it comes to Apple if this thing is just going to V-shape if the market starts to get extremely bullish. We'll pay attention to it, but for now, Apple is in that negative trend. It is not seeing the positivity. This is why we said Apple does not look like the best option if you're trying to take a play with this potential look that we have on the SPY and the Qs, right? You look for stocks that actually have a similar look to the SPY and the Q or reversal signals, while the SPY and the Qs have reversal signals. And that's why Apple was not a favorite of ours. I did not take a bullish trade on Apple because there was no reason to, right? There was no 2 hour divergence here. There was no 30-minute divergence, but it doesn't mean we can't go make it soon, right? We can make it soon because this is looking a little bit flaggy. Maybe Apple's going to be a little bit late to the party in some way, but if we start to see reversal signals here, that's what I'd be paying attention to. If we're going to get some kind of swing trade, well, then we're going to have to see this daily be able to confirm back up, and we just do not have that guarantee. We seem to have an area here where the market really wants to save that level. Okay, awesome. But are they going to be able to do it right now, or do they want to see some more work to be done? So I'll be looking for, can we take back the 5? Can we take back the 9 on the daily scale? But still, Apple doesn't look like the best opportunity. And same goes for Tesla, but look at Tesla seeing more positivity. Now, does this mean that Tesla is completely out of the woods when it comes to selling? I would say no for the most part, right? We can still see that that 30-minute is pretty close to the center line if we wanted to dip down. What did we say from Tesla in order to make a stronger base? Well, that is going to need to probably retest this breakdown area and then give us a higher low or give us a lower low. So something we can really look for here is look where you're stopping right at the 5-day moving average. And if that curls down and then curls back up, people can get really bearish here and then just see that curl up into positive territory with that MACD really close to the center line. So I will be keeping my eye on Tesla. That has proven to have some positivity. The 2 hour was able to cross, so if it's able to reload without crossing back down, that would be fantastic for the stock. So this still does lean us towards, bullishness over time actually for Tesla. Comparing that to Apple, Apple's giving no signs of wanting to go in the upward direction as of now. Amazon, you guys know that this is one that I really liked. I mean, 2 hour divergence very plainly on the RSI down there, and the fact that the market, SPY and the Qs had divergences as well just makes you go, okay, Amazon's one of the ones that most likely will be following that trend. So we're just looking for, can the 2 hour go positive, and then can the daily scale turn up here? When that daily scale does turn up, you have a very obvious level you need to get through, and we did just update the weekly expected moves, right? So if you're trading any of these individual stocks that we're looking at, you can go over to Patreon. The list there is like SPY, Qs, IWM, DIA, TLT, Apple, Tesla, Amazon, Nvidia, AMD, Meta, Microsoft, Google, AMC, GME, DJ. We give a ton, and we just added Broadcom. We just added AVGO, so if you're looking for that, you know, we do give weekly expected moves, and you can get those 68% zones directly from me. And then at the same time, we do put out a weekly update video. So very good things going on Patreon, but we just need to notice that, hey, this is all looking good. Can Amazon back off? I mean, yes, it can always go try to retest the 5, but I assume as it's accumulating in here, we're going to see either a dip down to the 5 really quickly, or we're just going to see this break through and then see if we can get through the very obvious level. Once again, a lot of stocks giving you very obvious levels that if you get past them, it's a very high probability that those type of stocks are going to see new all-time highs. Then we get to Nvidia. Nvidia, great, crossed up on the daily, able to go positive. So is this thing about to become a monster? And that's where I just like, if you go look at SMH real quick, you're going, hey, yeah, the market's really, really bearish, right? Except this thing has been consolidating for a long time, and it looks like it wants to bundle up, and then maybe break through 261.17. So that means Nvidia is really leading the charge here for semiconductors to come back into this market very, very strong, which means maybe we shouldn't be sleeping on AMD and things like that, right? Maybe we shouldn't be sleeping on that. We can look at that during the live show tomorrow if someone would like to. But this is very good. You're going positive, which is what you want to see. We never curled back down. Really, Nvidia throughout the whole time, we were calling it to a T. We got the move up to 141.12. We got the breakout through this. We reloaded by retesting 135. We saw a double dip to create a divergence, and we turned up. Like, it was just fantastic. And the 2 hour is up here, and it's not even overbought, right? We're not even overbought just yet. So something I'd more be paying attention to are little 30-minute pullbacks, right? The 30-minute actually is overbought for Tesla or for Nvidia. We have seen this move slightly sideways, so it could be in either direction, but I assume that somewhere in this area, we are going to experience at least a minor 30-minute pullback to get this MACD a little bit down towards that center line. That's something we will be paying attention to, but maybe we need to react up a little bit higher first, right? We can see how important this level is. Notice that Nvidia has already taken out the important level that would be marked off on other charts for different stocks. It's already taken that out. So a squeeze is very high potential here for Nvidia, and everyone paying attention to head and shoulders on Nvidia right here. And what were we saying during this drop? And then we called some kind of bounce here. Hey, okay, now let's see if we can form this. And that's exactly what seems to be happening here. We even have a little one in here that's projecting us higher as well. So if you're able to do something like this, you're able to react up to here, this could see a pullback, but then that could actually just be a small shoulder there. So we'll pay attention to it. But overall, you just have to realize, hey, Nvidia's looking pretty damn bullish with this kind of setup. So most likely any dips will be bought here. Meta, you guys know this is one of my favorite ones. Divergence, pop, except the thing is now you have a 2 hour divergence behind it. So that's perfectly fine with me, because that means the daily's likely to curl up. Where's the daily positive territory now? Once again, I'm going to say this because I want people to be paying attention to it and understanding why I'm going to pay attention to Meta. If we are going to see some kind of corrective move early on in 2025, if we are going to see a crash early on in 2025, I think Meta will be a good indication of that. Can it get rid of the divergence point, or is it just going to make that divergence a little bit more solid with a 111 across the top here, a 111 across the RSI there? That's something I'll be looking for, but notice it's already trying to take out this level here. So Meta is one that has, I think, the most stable base. I'm still aware of how things can go wrong, right? 30-minute crosses down and it keeps going negative. That can be a bad thing, but look how positive that 30-minute is right now, and you have no reversal signals. So it is very, very likely that we are going to end up higher than these type of levels by the end of the week. So we'll pay attention to pullbacks down towards 598, right, where that 5 could be catching up, retest of the 5 to gain some more buyers down in that area, curl down on the MACD, curl back up. Everything's fine there, but I think you do have the opportunity to still actually break through and head higher, and then I'd be paying attention to 617.82 or your weekly expected moves over on Patreon for Meta. Microsoft was not one that had the best 2 hour reversal signals, right? It actually doesn't have them at all, right? We don't see any kind of divergence down there. We just see a nice little V here. So something that we do have here is we have to be paying attention to If this thing can hold up over time, right, create a series of higher lows, that would be huge. Higher highs, higher lows are always a good thing. Trade the trend. But if this thing gives up too early, right, if we end up in this zone and then we just fall, you can come down to make some kind of double bottom, to make some kind of base for Microsoft. Just the 30-minute here has created some divergence across the way. We see divergence on the MACD and RSI. So that's fantastic. And we're trying to go positive, but we're running into the 5. We weren't able to take that back last week. We don't have a stable base according to the 2-hour chart. So if we wanted to, we could just dip down right now to try to make that strong base. We could keep going and then make a strong base with a higher low or some kind of divergence. So Microsoft's going to be one of the more complicated ones, and we kind of pointed that out. Once it did lose this structure in here, it loses it, and we go, okay, this one's going to be a little bit more difficult because you don't have that 2-hour structure. Doesn't mean it can't get extremely bullish. We can still pay attention to the fact that the 2 hours cross, and if that continues to go positive, it never curls back down, then the daily curls up, whereas if it's by the center line, you have a pretty simple swing trade that says, hey, if we get above these levels of about 440, we actually could squeeze and take out this high, maybe go a little bit higher. So that's what I'd be paying attention to. Mostly for Microsoft is at least some daily confirmations on the swing. AMC, we don't want to spend too much time on this because really not a lot has changed. I mean, you're just holding down at these levels and you're seeing the wick start to come in, and we're noticing daily divergence just like the last time it actually started to melt up for just a slight moment, and then it squeezed within like a week or two later. So once again, still waiting for the daily signal. We have updated the weekly level that you need to break through in order to see something crazy with the options market. That would be 450 for this week. So the reason we're paying attention to this now is because 2-hour divergence has confirmed. We'll see if that makes another dip, right? But this is showing some weakness and momentum where the daily time frame can actually turn up. And so that's why we're paying attention to AMC. It's kind of like once everyone gives up on it, they make everyone give up. Well, there's a reversal signal, and that's everything we look for big moves in the market, for big reversals. So don't be sleeping on AMC. It still might move down lower, but it could mean there's opportunity coming if that daily chart does turn up. Now, GME is the more interesting one, in my opinion. You have divergences up here at these highs. You had those confirm, you curled down, and you're trying to confirm that back up. So the bullish thing is, can the 2-hour curl up? The implied volatility for GameStop this week has gone down pretty dramatically, actually. Usually it's always above 100, but you do have these certain weeks where it's like only 80% and things like that. And this is one of those weeks. So we'll pay attention, because if this 2-hour confirms up, where are you most likely to gravitate to? 3470, right? If that's a strong, nice curl up, okay, 3470 looks to be the move there. And we'll see if this is able to go past that, because that's when you'll see something crazy. That's when you'll see gamma squeezes start to really happen, take over, and then that could lead into short covering if that's something that you're looking for. Now, I did want to point out one bearish thing. That's not really the best bearish signal, right? We've done this enough now. If you've been a part of this channel for a little while now, you know what a good confirmation looks like, and you know what a bad one looks like, okay? You do have daily divergence here for GameStop, very plainly, on the MACD, on the RSI. So you should not be surprised at all if this starts heading in the downward direction. If you break 28.35, this can really start to head down. Once again, we just said the bullish thing, though. Don't ignore that, right? Just because we say the bearish thing next, don't ignore the bullish thing. That's on a shorter time frame. You need to watch that first. But I want you to notice that this has technically confirmed on the weakest type of confirmation, right? Just the terrible, almost like the fake out confirmation, which is you have a positive inside trading bar above the 9, and I believe it's even above the 5. So this is not the best confirmation by any means. This did not convince me to sell any of my GME stuff right now, because that's just kind of silly to do, right? I want to see the next bar. If the next bar is a nice negative bar like this and it closes down at lower levels, that's when I will most likely be managing some risk there, right? But if that doesn't happen, the 2 hours able to curl up, I'm going to see if we can make a move above 3470. I just wanted to explain this is a positive bar above the 9 and above the 5 right now. That is not a good confirmation of divergence. You're going to have to see what Monday has in store for you for GameStop. Now, volatility, just to talk about this briefly, I really just want to point out, hey, we have confirmed down again. And that is do you see the difference between the look of GameStop's confirmation for that divergence and the confirmation right here of another downtrend move, right? An A, B, C type of move. Well, you can really see that plainly, right? We crossed on the MACD. We are below the 5. We're below the 9. We're even below the 20. And the only thing holding us right now, as we close at the lows there for VIX, is the 200. So we will still pay attention to reactions off of the 200. I think the most important thing for volatility going forward into Monday would be just a 30-minute reaction. I think you could see some 30-minute reactions here unless the squeeze is already on. So we'll pay attention to if this 30-minute can curl up, but it's our shortest time frame we like, and look at it. It is negative, right? So if that does curl up, it is very likely to curl back down. If we start to make a base, that's more when we will pay attention. The 2-hour chart, just so you're aware, that would be if that 30-minute can keep going and you see the 2-hour cross, that's when you might want to get a little bit more scared. But that's just something we have to point out. That is very much so, it is very less likely to happen at this point, but it is good to say it out loud so we are aware of it. So the most likely scenario for volatility is you are going to see some kind of squeeze soon once we get past key levels, and you are most likely seeing this as some kind of A, B, C down to 1212, and this is where we will really start to pay attention. And if we go down towards 1212, make some divergences, and we're outside of weekly expected moves, monthly expected moves at the time, that's when we'll be looking out for those reversal signals and saying, hey, we might have ourselves a little correction. We might even have ourselves some kind of stock market crash. So yeah, a fresh week, and I'm not going to lie, it is very nice that all of this is done with because, you know, we do have a solid community here, a lot of people dedicated to learning, and this is a very complex thing. It really causes a lot of emotions to come out, and people try to short at the exact wrong levels. So it is good that this happened because it displays, you can go back and look at every video from last week, and it is all helpful. In fact, you can go all the way back to potentially when this big drop happened. You can go all the way back to Wednesday, December 18th if you really want to learn, and then see how we were talking about this, see how we were talking about this, see how we were talking about this. And if you even joined Patreon, you can hear the video where we called out why I was selling all of my calls in this area. And it's just fantastic to see. So if you want to learn, you know, it's fantastic to do your back testing on a channel, even with someone who can go through these things with you. You can look back towards December 18th and just see what we were talking about throughout this whole thing, which is just awesome. Thank you guys so much for watching today. I really do appreciate it. The main takeaway is it looks like something big is coming to the upside, but we're still going to be aware of the risk of the downside. But it does mean watch. It doesn't mean, hey, this 2 hours curled up and it has to go to all-time highs. It means it's highly probable to go to all-time highs. So we're always still paying attention to our risk as we are potentially approaching some kind of market top, whether it's a correction or crash. You still want to be aware of those topping out signals, and we could create those in January. So if this thing starts to rip, don't be sitting there getting all cocky and being like, oh, okay, we're bull side, bull side, bull side, right? Still pay attention to the same things we watched down here, just maybe in the upward direction up outside of that monthly expected move. So thank you guys so much for watching. If you want to learn, the course is on sale right now. You can get that down in the description for only $100 for the full technical analysis course, right? We're going to do this every single year. I think that the New Year, New Me sale is a great thing where January, the late December to January, you can get the courses down in the description for extremely cheap prices. Really benefit you guys right as the year is beginning. Really try to change up your trading or fix some things, maybe learn a little bit more so that you can become better. I'm always learning as well, right? I always push myself to learn more and more and more. And if something becomes helpful, I add it to the course, and you don't have to be charged anything extra, right? If you bought the course, you'll get the extra info whenever I add to it. So thank you guys so much for joining me today. I look forward to streaming with you guys in the morning, and I hope we all have a fantastic week. All right, guys, peace out.